Hey folks, welcome to a trading day review. I'm going to be going over the trades that I took today, and the reason why I'm doing this video is because I took one winning trade and 3 losses. It was not the best day, and I wanted to do a little bit deeper dive into my losses and what they came from. Is there any way that we can overcome these, and how can you prevent yourselves from taking multiple losses in a row on a day that has no news? We've had a choppy day, but then we had absolutely beautiful price action in the afternoon. So we're going to be going over that here. Let's begin with our first trade, which began right off the opening bell. And this was the win. This was a decent trade. This was about 25 handles for multiple contracts. And we basically took the trade off of the first fair value gap of the day. It ran into this breaker here. We have this breaker sitting here. We got the low, high, lower, low. It breaks higher. We kind of creep a little bit up, we expand higher, and we retrace it. And it was this candle right here. When it hit this level breaker and then this candle right here, when we wicked into this level and then we closed green above this candle here and above this candle here, creating an order block, I got in long right there, and we targeted these highs sitting over here. Ended up selling some of this in this retracement. And that was the first trade. That was the only winning trade that we had for today. And so as we go through the day, we then get this retracement. Now let me back out here for a second. I was targeting these London highs right here. And ultimately I wanted to target the previous day high that was sitting up here and another previous day high sitting even higher. Now, that was my target. That was my daily bias. And the narrative is where I got incorrect. I was looking for a quicker move in the morning, and we were not able to get that. So my second trade was right here. I took a long based off of this inversion gap right here. You can see that is a fair value gap that was violated by this green candle. And when that candle runs, it closes right around here. Now that already was pretty high, but it was still 17 handles to this high, so I was willing to take it. But my stop loss also would have been 16 handles. Well, we ended up directly running against me immediately upon that close. I honestly don't regret taking this trade because we did grab liquidity right here. We ran a little bit of a sell side, we dipped, and we were aggressive on this candle. So this one honestly just didn't work out in our favor, and it's one of those trades that you go, okay, that tells me the market is not as in sync as we think it should be. Now, if I were to zoom out and I were to look over here at ES, and we were to zoom in on our AM price action, this was the AM price action right here. Here's 9:30 open right here. This was 9:30 open. And from this point on in the morning, from 9:30 till literally about 11:45, we had, this is the price action that we saw on ES. Now, this price action is not very attractive either. And we didn't really have the markets, ES and NQ, weren't really in sync. And this is one of the reasons why, if you're not having in sync markets, we really should stay out, and I didn't. And I found out the hard way on this trade right here. Well, when we expanded when it expanded higher here, we hit the previous or the London high. Now at this point, this is where I think I start making more mistakes. And I should have been able to identify these, but I didn't. So here is mistake number one. Mistake number one is when I look at this relative high to low, when we look at where we are in this range of price action, we are really in premium. So let me zoom out to the hourly here, and let me give you some context. Okay, so far we ended the day like up here. But when we pull from the low to the high, this is our dealing range that we're trading in, all in this price leg right here. Equilibrium was way over here. Equilibrium was well below where I was trading. Here's that level over here. And as you can see, if I was to pull that all the way across, it comes out at this weekly, the first weekly fair value gap, which is sitting right here. So we were already above it and we were in premium. So honestly, I should have been looking for shorts or staying out of the market completely and waiting for something clear to catch my attention. Now, when we made this high right here, we retraced and then we moved back higher, and I took this long right here, which was an inversion fair value gap. Now, the mistake that I made right here was that it was the first attempt to go higher after we purged liquidity. After we purged liquidity, I should expect some consolidation. I should have been smarter and more aware that this probably was not going to run right away. I took it and I ended up taking a loss on that trade. So after that, I'm like, all right, I'm going to sit on my hands and I'm going to wait. It needs to be very obvious. And obvious we got. This trade right here was obvious to me. We started continuing that direction and we got aggressive right around here. We ended up closing below this inversion fair value gap, and I wanted it to see it run this low sitting right here. Now, we never actually ran that low. It ran this low, it closed below the 5-minute inversion fair value gap, which gave me confirmation that we should see lower prices. But it bounced off the first weekly fair value gap, which is this darker fair value gap right here, and we pushed higher. And that was my third loss for the day. And as you can see, we continue to range in this area for the remainder of the morning. Now, the only opportunity that I saw, which I did not trade this, I was done for the day after that third loss, is this trade right here. And the reason why is we swept this high right here, and this trade was also taking place right before lunch. It was an inversion fair value gap running lower, looking for this sell side here or here, and we ended up running those 10 to 21 handles, which would have been a decent trade. But the point is still the same, is that when I look left, this price action failed me twice in a row right here. This is a trade that I wouldn't want to take, and I would have, if I was still in the market, waited to see if this trade play out to give me confirmation that we should begin to see better price action. And better price action we did after this point. We ran all the way down here. We made this low at 1242, sweeping this low here and coming into just above the first fair value gap of the day. We never actually ran it. We just ran and swept these lows sitting over here. After we swept those lows, we started pushing higher. So a couple things happened, is that we had an inversion fair value gap after this, which was right here, and also was the breaker. This was a breaker as well, and you can see that the breaker played out as well. It didn't come back down into it, but it bounced off that very, very quickly. And this is the trade that there would have been two trades that I would have taken. It would have been this one right here, which we have the low, high, lower, low, and we break higher. If we zoom out to the 5-minute, let me show you what the 5-minute looks like on that retracement. We have this 5-minute candle, these two down close candles right here. This candle close would have given me this candle right here, or this level right here, which would have been a change in state of delivery based on the close above these two down close candles. Well, we got that on the 5-minute time frame. So this candle was at 1245 and it closed at 1249. If I go back and I look at where was price at 1249? 1249 was this candle right here. And this is the candle that we would have wanted to get in on. I'm going to remove this because it's annoying. This is the candle we would have wanted to get in on, which would have been a close above those down close candles. And that would have been above our inversion fair value gap, above our breaker. We would have seen it found support on our inversion fair value gap, and we could have taken a long right there. That would have been the cleanest setup so far. And it would have made sense as we began to start seeing better price action or our trade setups actually play out. Now, this is probably the best trade of the day that I would have taken And honestly, looking at all of this, I traded in high resistance liquidity. All of this price action right here is what we call high resistance liquidity. It's a lot of up and downs, 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 all the way. And then here we just have 1, 2, 3 retracements before we hit the previous day, not the first previous day high, but the next previous day high, which was even higher. And it moved so quickly. So when I would have seen this price leg right here run without any retracements, that would have been my indication that it is time for us to look for a setup. And where would that setup be? Well, it would have been to try to run this now once was high resistance liquidity, turning into now low resistance liquidity through these candles here, pushing through very quickly over these levels right here. And our entry would have been on this small inversion fair value gap or on this breaker sitting right here. They overlap again. You have this nice breaker, which would have been a nice entry where we could have gotten long. We would have had to wait through all of this up and down right here, but it would have never hit our stop loss or taken us negative. And we would have seen an expansion higher very, very quickly to the previous day high right here. Now, holding that from that entry to there would have been 57 handles, and that would have been a beautiful day. The lesson for me is this, is that when I'm seeing a lot of back and forth price action, when I'm seeing this type of movement in price like this, I need to understand that this is high resistance liquidity, but will turn into low resistance in the future. And I just need to step back, wait, let it do its thing, and actually show me it wants me to take a trade. And this period of price action right here between 12:45 and 1 o'clock, this was the answer. It was a clear indication that price was now going to move quickly. And we obviously knew what direction it wanted to go. It was moving towards the previous day high because before this, neither the high nor the low had been taken at that point. And it refused to go even lower below 930 price, which was sitting down here, as well as the first fair value gap, which is sitting right here. Meaning everything was bullish. Everything was bullish, and my mistake was trying to trade in a market that did not give me proper and clean setups. And I should have been able to recognize that. To be honest, I talked about it multiple times in my live stream, but I just kept trading. Lesson learned today. So I wanted to go over this. Hopefully this was helpful and insightful to you in your own trading. Thanks for watching, guys. We'll see you in the next video. Take care.